Good morning and welcome to another edition of Roadhouse Last Call, morning show that gives you everything that you need and more. This glorious day, we have Hell's Bells, which is myself, Ender with the lines that never cease to amaze us all, and the Stockington joining us. Oh, Ender, how are you on this fine morning?
Fine.
You're fine. This is good.
Good morning.
Morning. It's raining in New Hampshire. It's rain.
I hear you're going to get some of that.
It's raining. Dock outside.
It's dark.
Dock, you see. Freak is filling
Trying to fit in. Are you?
I'm trying real hard to fit in by not leaving the house. This is my plan. My plan
Probably
is
the
to
best
stay.
plan.
Really is for everybody. We must protect the innocent. I don't think they're. Oh no, it's interesting. It's like the couple of people that I met. They're like, well, we try to be direct, and it's like, bruh, you don't know what direct is. They have this thing called nice direct, which I'm still struggling to figure out what that is. Still struggling. Speaking of struggling, vendor, about this market.
Fun, right?
Good times.
Good
times.
Hurry up and wait. Hurry up and wait.
Yep.
Yeah. Well, I guess we got to talk about the stuff that's going on in the world. I don't exactly know where to start. We can talk about China because that's always fun to talk shit about. So we can talk about them. It was earlier reported that they wanted to start playing with Ant Financial again, and I want to give Jack Ma an opportunity to come back into the fold and be a good servant of the regime. But then they're like, no, that's not true. That's we're not doing that. It goes back to the overall concept. It's like if you're playing with these Chinese tickers in this Chinese, game of circles, you're really playing with fire. It's one thing to play scalpathon intraday, but that thing, you're a headline away from being up or down 10% just based on what Xi decided to eat for dinner last night. And that's just not a good thing. In other news, the ECB basically decided not to raise rates. They're keeping rates flat, but they're planning on raising them twice now, I believe through September, much like what we're doing now. They were dealing more with a negative rate environment, unlike us, but they are going to be raising rates, which can put further strain on growth. There is an overall trend that is taking place regarding jobs, employment, rates, and inflation. This trend is that there are hiring freezes left, right, and sideways. This is happening. This game that is being played right now with the Fed, with interest rates, playing with growth, trying to force us into a recession, it still goes back to, like I said, about a month or so ago, that little clip from Pulp Fiction where Uma does the drugs and they're standing above her with the adrenaline. The drugs are circulating through the system and Uma's about to hit the floor, and we have to figure out when the Fed is going to be like, okay, let's go ahead and give her the shot to bring her back to life. That shot coming from the Fed ultimately is going to be in them kind of cooling out on this rate hike conversation and allowing things to kind of settle a little bit. Because right now they've turned the basket completely over. It's like everybody's grasping. And this, again, is due to their overall lack of competence in any way, shape, and form. To go along with this, we're getting growth forecast cuts from pretty much every central banker and world banker out there. They're cutting growth all the way across the board. Again, this is basically being fueled again by the rate environment. So we have to continue to pay attention to this. One thing that I'm struggling with a little bit off the data release this morning was, we got a pretty good sharp move to the downside. The VIX elevated, but coming out of nowhere was the dollar taking a tumble off of that data and is starting to mimic the market in general. That's not something that's necessarily good. If that divergence does happen and we go back to to the dollar running with the markets. That's not a good look. So we'll see how that plays out. Outside of that, Tesla got an upgrade by USB. It's cute and all. There's some other news out there that really is secondary to the whole conversation regarding inflation, jobs, and rates. So tomorrow we get inflation data. We got jobs data today. The unemployment or jobless claims did tick up. And we get the Fed on Wednesday. So that's our landscape. I expect more of the same that we had pretty much all week into today. It looks like we might have found a level down in through here, but I'm going to leave those levels up to Bender because he knows what he's talking about. Bender?
Yeah, so let's see, what do we have this morning? We are well below, so let's start with the 60-minute on ES, well below the 10, the 20, and the 50. That's up closer to our 4120 level. You got the 10 at 4119, the 20 at 4117, the 50 at 4128. The 5 MA on the daily, 4123. The 10 MA on the daily, 4116. So 4110, we know that was an important level, that 4134, obviously 4120. Now everything is kind of in that sort of zone. So, if we don't bounce and the push to the downside continues here, we got to look to 4075 to 4080. If they give that up, I think that opens the door to down around 4030, and then we start looking at 4000. If we bounce in here and we start making moves to, if this is overdone this morning and we start making moves to the upside, then obviously we're sitting right here at 4100, and we know all those levels that exist above us that we have to look at those potentially acting as resistance. With all those moving averages stacked, whether it's the 5 or the 10 on the daily, or the 10, the 20, the 50 on the 60-minute, there's a lot of congestion, between, say, 4115 and 4125. So, there's 10 points in there that there's a lot of stuff that we'll have to get through. I don't really like the fact that, if you're playing long, the fact that we gave up the 10 and the 20, or the 5 and the 10 on the daily. We need to, if you're looking for upside, we need to consolidate above about 4080, and those will flatten out, and then we can take another shot at them. We've also got this trend line, and I'll post a chart in Discord, but we've got this trend line from the highs on May 30th, and you can draw that trend line to the highs that we put in yesterday, and you can kind of see what's forming there. If we do recover from this drop and the market decides to rally today, we need to look at 4150 is where that trend line would come in. That's what I got.
That makes sense. It's like some of the, and again, it's like I'm looking more at SPY than ES, and some of the areas that I'm looking at, we might get a chance to play 407 again. I will not be upset if we get a chance to play scoop there. 411 seems like it's going to be an area that's going to be a little bit, difficult to repop. And then 403 would be a level that I would try to play load on. As far as if we do get down in there, but it's like a breakdown to that magnitude, considering the data coming out tomorrow. It's, I think it's a little bit in question that we actually get down to that 403 range. 407 seems legitimate. 411 to the upside seems legitimate. So let's see how all that plays out. From a VIX standpoint, or let's just talk about UVXY. A break over 13 is going to be very, very painful. We've seen that. We saw how that support acted for probably 3, 4 days. That 13 level was support. Now it needs to act as resistance in the same way, and it tried to bump on it a couple of times the past few days. So watching that 13 level. Ideally, we want to get back underneath 1250 sooner rather than later, and allow the markets to kind of again consolidate in this area that Bender's talking about. But we keep on creating these messes for ourselves, Bender.
Yep.
Yep.
And a lot of it that we've noticed has become, I don't want to say untradeable, but it's like it's like, and I'm talking to myself here specifically. I had several entries yesterday that I could have just banged out really, really nice cash. But I'm sitting here waiting for this 15 to 20% move to turn into 30, 40%. That doesn't happen. And then now I basically have to cut it break even. Like that was my day yesterday, which is absolutely aggravating, but it's like, that's the environment. And what you can't do is wish that you had something different to play with. This is the game until it's not. And I think
Yep.
the game remains this way until we get through the Fed on Wednesday. Then that's kind of what we're looking at, unless there is a shock number coming out of the inflation data tomorrow. So, Mr. Stockington, what do you have? I know we had a plethora, a cornucopia, if you will, of dark pools this morning.
We did. We had a lot of stuff going on. So, yeah, my list in particular was we had AMD. I think that's going to be interesting today. They've got an investor day going on. So I'll keep an eye on that. Tinfoil hat in some of our chat. Tinfoil hat theory yesterday in our chat rooms was, market makers pushing it down so they can get it for cheap, and then we see what today gives us. So that could be interesting. I had this 101.7 level that I was going to take AMD short if it broke during the day, but with our gap down, we're kind of just barely below that now. Got a little dark pool above at 101.9, so we'll see if we get some upside, some retests on AMD. Then I had Amazon. There was a nice dark pool on Amazon last night at 121.18, almost $900 million. That was about 6%, almost 7% daily volume on that line. So we're below there now. Would like to see if we get another reaction to that area. Microsoft dark pool has been a thing lately. There's a lot of dark pool just across this whole area right now. We didn't get any specifically that I saw come through last night that was at least worth noting, but the lines that I have in this area, there's the big one at 270.02. We have one that we're stuck in between two right now, 269.50 and 268.75. So I'll be watching for some reactions to those lines. XPEV, there was 35.2 million on XPEV at 27.53. That's around 13% daily volume. So that was significant. We drifted down pretty good overnight on that one. So see if we get a little bounce. They were hitting the 27.50 puts pretty good, decent money. Those are out to next week. That was some flow we saw yesterday. So if we get a little move up, I'll be keeping an eye on those puts as a potential short on XPEV. And then in general, SPY. So we've been getting a lot of dark pool on SPY as usual in this area. We've got 409.73 below at the moment, 410.56 above, and then the big one, there's like $10 billion sitting at 412.07. So we'll be keeping an eye on that. And then BABA, that was on the watch yesterday. It's been getting a lot of dark pool lately, and the one from last night was at 119.62. So we're operating slightly below that now. Could be a good one to watch for a bounce and a reaction to that level.
Thank you, there, Stockton. So do you see anything that's actionable that you're looking to play out of the gate?
I think I'm gonna take it slow, see if we get some bounces. I mean, we were talking a little bit about the stock almanac and what tomorrow's like a quad witching, whatever you want to call it. And historically, these next couple days would be bearish. So we're going to take it slow, see what flow tells us. I scalped the XPEV 2750 puts yesterday a little bit. That could be a good one. But otherwise, just going to kind of see what we get.
From my standpoint, I pretty much agree. I want to. Today is a day that I want to let it kind of shake a little bit. And if I don't take a trade today, I'm fine with that. Knowing that the data coming out tomorrow, knowing that the Fed is ahead next week. For me, yesterday really it was a real challenge on patience for me yesterday, knowing that I had these entries, and then seeing these candles that would rip and then just disappear. Very challenging day from a psychological standpoint. Wasn't bad financially, but from a psychological standpoint, it becomes very damaging when you're patient, you wait for an entry, you get your entry, you get a move, and that move just evaporates right before your eyes. So, the one thing that I can say for sure, the flow continues to tell us this. If we're looking at flow in Stockington, you can comment on this, and I know Bender, you can comment just by watching these moves on the ES at the same time. When you're not getting consistency in buying or consistency in selling, and everything is kind of contradictory to what a normal trend would be, that's when you get chop. And flow over the last several days has been choppy. Now, they have been bearish on semis. We've seen a strong pull on semis. They have been bullish on energy. Energy's performed very well. But in general, it's been very difficult to find a consistent trade that you can kind of nurture and move with. Again, this is the environment that we have. We can cry about it, or we can embrace what it is and try to capitalize on it. Sometimes capitalizing just means not fucking with it at all. So just keep that in mind. Nobody's forcing you to click a button. With that being said, Bender, you have anything else for the peoples?
Protect your capital.
This says protect your capital.
Protect your
This is a good time
capital.
to tell your I don't want to say story, but your little anecdote as far as capital. Might be a good time.
The soldiers on the field.
Soldiers, yes, soldiers on the battlefield, yes.
If you think of the money that you have in your account, that's your army. Those are your soldiers. And every day you deploy them, and you try to capture, more, call it land, but more capital. You send your army out to battle. You come up with your strategy, decide how you're going to deploy them, and when to pull them back. Because if you just leave them on the battlefield getting slaughtered, your army gets decimated, and you're out of the game. You're out of the running, and you cannot. You have no army to deploy to control, more territory, because you left them out there to die. So know when to pull them back and regroup, so that you still have an army to deploy, and you can always send them back out when the time is right, but don't leave them on the battlefield to just get destroyed.
And it's like Bender mentioned that a couple of years ago, and it's always stuck with me. This concept of not letting your crew, your army, get destroyed on the battlefield while you sit there and watch. Like there's nothing to gain and everything to lose with that type of mentality. And if we're being fair, and while you were talking, Bender, it hit this thing. It hit a nerve with me. It's like, if I'm being honest, an honest broker, and looking the way the flow is coming through, we're not getting big money coming in and hitting stuff. Big money is sitting there waiting. They're waiting. They're waiting for the data today, the data tomorrow, and whatever bullshit reason Al wants to give as far as why he's face fucking the American people on Wednesday. That's what they're waiting for. So if they're not putting their soldiers out, when we do put ours out, we have to understand that it's okay to send them out on a quick strike mission. You're not going to win the war this week. You're not going to win the war. You can lose it. You're not going to win it. So thank you again, Bender, for that. It's a concept that's always stuck with me. So I appreciate you, pushing back through that. With that being said, we have about 20 minutes till open, plenty of time to kind of regroup, look at things, especially the lines that Bender gave, really kind of lock in and understanding that those are strong areas of interest through some of the dark pools and activity that Stockington gave. And yeah, we got 20 minutes. We'll see you soon.
See you in a few.